Hey, good morning, fam. Good morning. Happy Sunday to y'all today. Happy Sunday. Listen, I'm broadcasting live today in the wonderful neighborhood of Bradley Lane over here in Chevy Chase, Maryland. Listen, if you happen to find yourself owning a home in this specific location, just know you are blessed beyond measures. This area is where the upper class reside. If you're living here, just know that you have done extremely well in life. As you can see, it's nobody out here. It's quiet. You might see a few people walking around here and there. But outside of that, nothing happens here. They have the best schools. Okay. This particular school that you're seeing right here behind me, okay, it's one of the best schools in Montgomery County. It's an elementary school, right? Okay. I believe their rating is like almost damn near 5, like 4.8 or something like that. That's crazy. Listen, so what I want to talk about today, right? And I'm in this area for a reason. And I've been doing a lot of conversation with you guys in reference to home ownerships and how I believe it correlates to people not having enough money to survive in retirement, right? And I want to preface this again by saying to you guys, I am absolutely not against buying a home. Again, there's a reason why I'm in this wonderful, beautiful neighborhood, because I love homes just as much as the next person. A home is a wonderful thing. It's a place where you are able to create memories for you and your family, right? Okay. This I'm gonna swing this around for a second so you guys can see, right? Okay. This home right here, I believe is a pretty much kind of like Spanish inspired, right? You see different type of like. One thing I love about this area, the homes here are not cookie cutters. Every home is unique to itself, right? So I love this area. If you ever visit Maryland and you want somebody to show you around, message me. Bring your cameras because you're gonna have an experience. So again, I'm not against home ownership, absolutely not. But what I want us to start doing is do a little bit of reprogramming. I believe that they have programmed us to believe that if we don't own a home, right, that we're pretty much not doing great in life, right? And home ownership, I believe, is not for everybody, right? Specifically, the way that it's been presented to us. What do I mean? In America, to buy a house in America, over 90+% of the people have to take out a loan or mortgage to buy a house in America. That's a programming. That's a programming, okay? When you take out a mortgage, there's something called interest that you have to make, that you have to pay for that loan you took out, right? there's something called interest that you have to pay. And for some reason, most people don't factor that part out. They don't look at that fine print, right? And that right there is what I want to talk about with you guys today. Because you're looking at your 30-year mortgage and saying, okay, it's a $500,000 home and my payment is only $2,800 a month. 30-year loan for $500,000 at about 6%. And you're saying to yourself, okay, my mortgage is only $2,800 a month. But when you look at how much you end up paying over time, right? That right there is where all your long-term wealth is going, right? On the average, and let me pull this out for you guys, right? Because I did a little bit of homework for you guys. You know, I'm gonna come with a little bit of receipts, right? And when I pull this up, right, check this out. If you buy a $500,000 house at 6% interest rate, and you put down $100,000, that's 20%, right? Most people ain't doing that. Okay, you put down $100,000, right, for a 30-year mortgage. Your interest that you will end up paying to the mortgage company will be $463,352. So you took out a loan for $500,000, right, to end up paying $463,352 in total interest payment over time. Now, let me ask some of you guys a question, and you guys could chime in here. Do you think maybe possibly, you can use that money in retirement? It's just a thought. Do you think maybe possibly you can use that money, that $463,000 in retirement, right? Now, since we know most people are not going to put down 20%, that's $100,000, right? We know most people are not going to do that. So I ran another number and used what on the average most people do put down, which is about 5%, right? So for the same $500,000 home and at 6% interest rate, and you put down 5%, which is about $25,000 for a 30-year mortgage, now the interest you're going to end up paying is $550,231. You're paying more in interest than the amount that you took out as a loan. You're paying more in interest than the amount you took out for the loan. This is what I want to talk to you guys about. And what I want us to do is just switch what they've told us that we need to do. Right? They told us that we need to take out a loan to buy a house. Well, that loan comes with massive interest payment over time. Okay? We also know that most people will end up dying still owing a loan balance on that house. Okay? Most people, that's where the word mort comes from. Okay? It's the loan that you take, that you're taking out forever. Okay. So, What I want to talk about is unconventional, right? It's unconventional because most people can't grasp the concept of doing it unless they're like foreigners. Okay? Most people cannot grasp the concept of what I'm about to say unless they're foreigners, because most foreigners, when they buy homes in their country, they usually are paying for that house out of pocket. It's never a situation, how you doing? It's never a situation where they're taking out a loan from somewhere. It's usually out of pocket. And then you own it. No monthly payment, no mortgage, none of that crazy stuff. So if you switch that thought process in your mind and apply it over here in America, and you save your way to buy your home, and you can actually avoid the interest payment that you have to pay. Some people are going to say, well, Maxwell, how can I save $500,000? You can. It comes with discipline. And I don't mean save it in a bank account that's not going to allow you to earn any interest, because then it would take forever. You want to put that money in somewhere that's going to earn you a pretty decent return. So that way, this action comes faster. Okay? I would suggest a program like this. I would suggest maybe considering hold on for a second, guys. I would suggest maybe considering a index universal life policy. Okay? It's a life insurance policy that builds cash value. Here's a couple of reasons why I suggest this. Because one, it gives you a pretty decent return, average, over time. Okay? Two, there's no stipulation as to when and how you can draw your money out. So for example, if you're trying to save this amount of money in a 401k, it could work because you'll be a first-time home buyer. So if you're a first-time home buyer and you're doing this, then yes, it can work, because with the 401k, they allow you to pull money out if you're a first-time home buyer, or if you're going through some kind of hardship. And I believe hardship can only be withdrawn, I believe, one time a year or something like that, right? Cool. So 401k will work. But where the 401k is bad is there's early withdrawal fees and there's taxes. Okay? IRA, the same thing. You are not supposed to touch your IRA until you are 59 and a half. If you do, there's taxes and penalties for early withdrawal. With the index universal life policy, though, that's something you don't have to worry about. There's no stipulation, there's no taxes, and there's no early withdrawal penalties. And on top of that, you're making a pretty decent return. So if you want to buy your house cash and you're willing to be disciplined for the next 15 years of your life to avoid paying $500,000 in interest, this might be the best way to go. Now, let me tell you where this also benefits you. Because now, if you can avoid paying that amount of money in interest, you can now start to revert the difference for your retirement. You can now start to put that difference into your retirement, or if you're living in a house and you don't have a mortgage, right? You live in a house and you don't have a mortgage. Guess what now you can do? You can pump more money into your retirement plan and emergency savings account. Listen, the way that they've programmed us to buy homes in the past is the way of debt. They want to keep you in debt. That's why they came up with it. It's a scheme that they came up with to have you spend money and to keep you in what? In debt. Right? So, if you're watching this and you now are learning how to avoid this, then at this point now, it is a decision based on you. Because right now, I did a video the other day in reference to only 1.8% of the people in the country have $2 million plus saved for retirement. Only 1.8% of the people in the country. Now, excuse me guys. Now, why is 2 million plus important? Because let's say you retire at the age of 65. And I'm gonna throw out some states out there. Maryland, Virginia, District of Columbia, Massachusetts, Maine, Hawaii, California, New York, right? Washington State, right? Some of these states, you literally need an income of $89,000 to $100,000 a year coming in retirement to be able to live there comfortably. Comfortably mean if you have a mortgage, you can still pay your mortgage, right? You got your healthcare costs, you long-term care, taxes on your property that don't go away. You're probably still gonna have a car note, auto insurance, dental, vision. You may want to travel, spend time with the grandkids, all these things, right? So that's why $2 million is significant. And right now in the country, only 1.8 million people, 1.8% of the people in the country have about $2 million. That means 98% of the people in the country have less than that. That's a problem. But again, if you were to pay your house off or pay your house cash, right, and you don't have a mortgage, you're now possibly able to put away $2,000, $3,000 a month into your retirement savings, which should, so let's say you're 35 years old right now and you're following this program. You say, you know what, I'm gonna hold off on buying a house, I'm gonna rent for a minute, but I'm gonna be a disciplined renter, which means I'm not just gonna rent and because I got this extra money in my hand, I can now blow it. No, I'm gonna now use that extra money that I'm gonna have and put it into an index universal life policy like we talk about, right? And keep funding that for the next 15 years. By year 15, I accumulate 380, 480, 500K. And I pull that money out now and I buy my house cash. Well, that put me at age 50. Okay, so at age 50 now, I can now turn around and start to fund my life insurance again, or whatever you choose to do, IRA, whatever, right? At about $2,500, $3,000 a month, because I don't have a mortgage now. I don't have a mortgage payment, okay? I can now start to fund my long-term plan with about $3,000 a month, Some people may even possibly be able to do $4,000, especially these people who are making high income, people who are making like 150K a year and above. They can now start to put, $4,000 to $5,000 a month. As a matter of fact, the lady who actually trained me in this business, right? Between her and her husband, they're doing roughly about 50 grand a year in their retirement plan. $50,000 a year in their retirement plan. Because they are high earners, right? So listen, I had to talk about this because as I'm getting more and more news clipping, emails about how retirement seems like a thing of the past for most people. That's a scary thought. Who in their right mind wants to work forever? Nobody that I know wants to work forever. Nobody. How you doing? Nobody that I know wants to work forever. So with that being said, if you don't want that to be your lot, then action has to be taken. Some people are going to watch this video and immediately just tune out because it don't interest them. It's not exciting. And this is where some of the problems have come, because a lot of people who are getting to retirement and they have no money, the first thing they'll tell you is, oh, I didn't know, nobody told me, nobody showed me this. I don't 100% believe that. I believe somebody may have reached out to you and you say now's not the time. Somebody may have reached out to you, you sat down with them and you didn't take action, right? But I don't believe now that we are in the information age, right? I don't believe that you can tell me that you actually didn't know. How you doing? You understand? So when somebody tells me that, in my mind, I'm like, okay. So if you're young and you're watching this and you're telling yourself that I still have time, well, some way, somehow, time gets away from most people. Some way, somehow, time gets away from most people. If you talk to most retirees right now that don't have any money for retirement or that have minimal money for retirement, and I'm in the field and I have conversations with these people daily, and for some reason, every single time, I always hear that infamous saying, I wish I would have started sooner. Every last one of them that I talk to say the same thing. I wish I would have started sooner. It's too late for me now. I just have to accept things as the way that they are. And I always tell people, it's never too late. As long as you have strength, you can do something. But again, most conversations I have with retirees is usually, I should have done this years ago. So if you're watching this during your 20s, 30s, early 40s, and you're still saying that now's not the time, I'll get to it later. Those older folks who are retiring right now with no money said the same thing too, around your age. Time is the one thing that you can't get back. You can always make money. You can't get time back though. And the way you grow, the way you make money is with money, interest, and time. The most important one out of those three is time, because time is what allows your money to compound. Listen, I hope you guys have a wonderful and blessed morning. It's a beautiful day out here in Maryland. People are out here walking and jogging. It's supposed to be 80 something degrees today, but it's not hot. That's a good thing. It's not unbearably hot at all. Nice breeze. So, if you stayed with me this long, if you're interested in what I just talked about with you, how you doing? If you're interested in what I just talked about with you, and you don't want to waste any more time, feel free to text me at 443-208-5480. That's 443-208-5480. I look forward to speaking with you. Have a wonderful and blessed rest of your day. Talk to you soon.